Stocks, bonds, ETFs, straight out of downtown Chicago. This is Zacks Market Edge.
Welcome to Zacks Market Edge, the podcast about investing in your life. I'm your host, Tracy Reinick, and this week I'm returning to the AI infrastructure stocks. Why shouldn't I? They've had a big sell-off in the recent stock weakness. Most of them have already reported their earnings, so we've already gotten in all the juicy numbers, and now they're on sale. I know many of you have been complaining the last few weeks at least about how you missed out on this trade and that it was just running away and it was too late and blah, blah, blah. Well, I'm here to tell you now, again, they're on sale. So which ones should you be looking at? They're the same ones I've talked about on this podcast in the past, but now we have their earnings in, so we're going to take another look at them, and they are cheaper now that they've had this pullback. Are they value stocks? Are they dirt cheap? No. So let's not get too delusional about how much on sale they are, but they are off of their recent all-time highs for many of them. And this is a nice little correction even for some of them, which is about a 10% decline. So if you liked them before, but were lamenting that you just never got in, now is another buying opportunity. I've said this many times with the AI infrastructure stocks and even with NVIDIA and the chips, that there have been several big major pullbacks in all of these stocks. These were buying opportunities to get in at a better, valuation and to feel a little more relaxed at what you were paying for the earnings. And this is looking like another one of those as we head into next year. So without further ado, let's start it off with one of the best performers out of this group, Sterling Infrastructure, ticker STRL. I own it in the Zacks Value Investor portfolio, and we bought it in 2023 as those earnings estimates were being revised higher. Now, I also own it in my own personal portfolio, and I do like to buy on dips. I haven't bought this dip yet, but it's looking pretty juicy here. So Sterling's now down 13.4% off of its recent highs. And this is just in the last 5 trading days. So that is a nice little pullback. On the overall chart, however, and I'm going to show you that right now, the price consensus and surprise chart here on Zacks.com, it doesn't look like much, right? You can see it pulling back there, just kind of getting back to the pre-earnings level. It did bust out to new all-time highs on the earnings, but still, nevertheless, it is a nice little discount on what was a more expensive shares. Now, Sterling, remember, is on the engineering side. They are building the data centers and they can't hardly keep up. And another area that is also very bullish for them right now that gets kind of lost in the discussion is the marketplace distribution centers. So Amazon, they built all the distribution centers across the United States and really the world, but Sterling is only US only. So we're talking about the US. And then they've been doing all their business out of those. But that was, 5-10 years ago. And we had the pandemic, and Amazon's still been growing the distribution side of their business. So they're now building next generation distribution centers. These are bigger. They have more bells and whistles. They have more robotics in there. They know what they want, and they are hiring Sterling to build out a bunch of these too. So these are higher margin types of construction and contracts. So that is going to the earnings. We're seeing record earnings, record sales. Let's take a look at what's going on with the detailed estimates on Sterling now, because again, they have reported. Now, they are a mid cap now. They were a small cap when all this kind of started. They're still very lightly followed. We only have 2 estimates on Zacks.com for them. So if you haven't heard of Sterling, here's your introduction. And you can see, let's look at the sales estimates first. For this year, 12.6% sales growth after a nice double digit last year. So I like to see that. And then look at 2026. It now has record backlog. It did acquire an electrical engineering firm, which will go to how are they powering these data centers. So they really expect to see a nice jump in sales from acquiring that firm. And right now they're still in the, kind of melding of the minds, position with it because the deal only closed a couple of months ago. But this is going to be a big driver for them as well. And you can see 2026, 19% on the sales side, approaching that 3 billion level. They have over 2 billion now in a backlog. On the earnings side, look at this earnings growth here for 2025 now, 56.9%. They only made 610 last year, expected to make 957, and then a very healthy 14.7% for next year, up to 1098. So the analysts, the two that we have, aren't getting too crazed about next year. And you can see not many earnings estimates revisions here. Everything is kind of calm and quiet here. So that's good. Nothing to get worried about in terms of estimate cuts at all. And then you can see it's putting together some nice beats many quarters in a row because people are underestimating this build out. Now, what's going on with valuations? We have a PE now of 34.8. That is a little bit cheaper than, again, just a couple of weeks ago after the earnings when it hit the all-time high. PEG is at 2.3, so it's a little bit more stretched. But if I could get this around 30 times on the PE, I would definitely be interested at 30, but it is still on sale here with this 13% pullback here. Could be, if we're looking at just this little price and EPS surprise chart, could be we're pulling back kind of into this range here, above 320, but below its highs, which would be just below 420, while we wait for some kind of catalyst. There has been big runs in these stocks this year, and so not surprising we're getting these doubts back in. But if you listen to Sterling's conference call, there's not a lot of doubts for this year or into next year, and visibility is good for all of these companies into next year. So this is Sterling, ticker STRL. Now let's switch over to the cooling side. And we're going to take a look at Eaton this time for some cooling. And they have other businesses other than cooling. It's ticker ETN, but they are on the cooling side as well. Thermal management is what it is. And just kind of scrolling down and looking at their chart, they too have reported. And you can see perfect on the earnings surprises. So they're an earnings surprise all-star. But look at this nice growth on the price of consensus. That's really what we're buying here. And if I can get it any cheaper, like this Liberation Day sell-off, now that was a deal. Currently, over the last 5 sessions, it's down, but only 7.6%. Maybe we'll get back to the 10% like we just saw with Sterling on Eaton. But it is a little bit of a discount here, and hopefully maybe we can get a little bit more. Now, this one's cheaper, forward PE of 28, PEG ratio of 2.5, but the growth isn't quite as dynamic on this one, but very steady. So I do want to get it a little bit cheaper to get this double-digit growth a little bit cheaper as well. So on the sales side, this year, 10.6%, next year, 9.9%. So very nice, right around the double-digit growth area. For a company that's as old as Eaton, these are great numbers. 2025, 12% on the earnings side, expecting 1209, made 1080 last year. 2026, expecting almost 14% growth again for 26. So a little bit hotter for next year, up to 1374. And then we do have a mix on the analysts because, again, they have several moving parts. It's not all just data centers for a company that's as big as Eaton. But we have 2 higher in the last 30 days. We have 1 lower in the last 7 days, though, for 2025 and also for 2026. So somebody maybe a little too bullish, and they're pulling back just a little bit there for the full year. But Eaton, also big player, and looking at this price and EPS surprise chart, you can see it also is pulling back to these September level before the recent breakout. And so maybe we're going to get it even a little cheaper here. I would love it. So on Eaton, if I could get it in the mid 25 range on the PE, or even a little bit lower in the like low 20s, that would be an attractive buy for me here based on the growth trajectory. So Eaton, ticker ETN. And then I did want to look at some of the interior companies like a Vertiv. I own this one in Zacks Value Investor as well. Also bought it in 2023 and in my own personal portfolio. Vertiv, ticker V as in Victor, R as in Robert, T as in Tom. They are on the racks and the service side on the inside, as I mentioned, of the data centers. Some of that is also on the cooling side, just making sure the chips don't start on fire. In other words, so Vertiv also having outstanding quarters. I'm recording this before NVIDIA's earnings came out this week, and Vertiv is in partnership with NVIDIA. And so I know when Vertiv reports an outstanding quarter, NVIDIA likely will too. And we hear from Vertiv weeks ahead of NVIDIA. And again, they did beat, and quite big, 24% earnings surprise on their last beat. They put together a big string of earnings surprises after just one miss in early 2023. And that's right when the turn happened with the AI revolution. So now look at this chart for the earnings side. And this is why we do want to get these on pullbacks. So Vertiv is off of its highs, but like Sterling, it doesn't look like much. But it is down 7% in just the last 5 sessions. So you are getting a little bit of reprieve. But like I mentioned earlier about pullbacks, Vertiv had one a couple of months ago after this last earnings in July. It had a little bit of a pullback there. And then obviously Liberation Day, a huge sell-off there, real buying opportunity, but it had one in 24 as well. Look at that big buying opportunity there in 24. So we are getting these with the AI stocks. This is healthy. They're not just climbing for forever. There are opportunities to get them a bit cheaper. And hopefully, as long as this growth is continuing, then we will, have a good opportunity here to buy on these pullbacks. So what does this earnings look like? I'm going to look at the sales and EPS growth chart on this one. So you can see 2023, that's the AI revolution begins, earnings up 234%. 2024, it continued on, up 61%. But 2025, look at this, up 44% again in 25. This is mirroring NVIDIA's growth, actually. And then 26, slowing a bit, but still up 26% expected for 2026. These are all not written in stone, and that's what makes people nervous. Maybe we won't get these numbers, but right now the analysts are bullish. And sales side, this year 27% and next year 20.6%. So nice double-digit sales growth expected. But again, they're in partnership with NVIDIA. If NVIDIA is expecting double digits, Vertiv likely will be 2. Forward PE of 40.5. So this is the most expensive one, but it was above that until this recent little mini pullback here. So I would like to get it down in the 30s at some point before I would buy. And maybe we are going to get that because we're hanging out right around 40. So if I could get it at 35 times, I would be much more interested. But look at the PEG ratio. This tracks NVIDIA's PEG ratio as well, which is 1.29 right now. Vertiv's PEG ratio, 1.35. And the PEG is the PE divided by the growth. So we are seeing the growth there, even as the stock continues to break out here. But we've got the 7% pullback. So that's making it definitely more interesting and going on my watch list. Now I'm looking at the detailed earnings just to kind of see what the analysts are doing, because it is a Zacks #1 ranked strong buy again. And this is why we're getting that. So the rank looks at the full year, and we have 7 estimates higher in the last 30 days. That's after its earnings report. And nobody's cutting. Same for next year. 7 are higher, nobody cutting. So that's very bullish. The rank also looks at magnitude. They're expecting 411 now. 30 days ago, 384. So that's a pretty big jump in the earnings for this year. And then 519 for next year after being at 486. So again, also a nice jump there. And a lot of that has to do with this 24-cent beat in this quarter. So they're tacking that in on the full year for 25, but also getting bullish for 26. And like I said, sales expected to be up hugely this year and next year. They're expecting 10.2 billion this year and 12.3 for next year. That nice sales growth. So these are just 3 of the infrastructure stocks. There are others that I have talked about. I took a look at some of the power stocks, and they haven't really pulled back much at all. So I'm not including them here as being on sale or a buying opportunity because they're down only a couple percent. And that could be because they're a little more stable and we don't have as much trading going on. Some of them are just utilities after all. And so their boat isn't being rocked as much as some of these others that are even small caps or small mid caps like Sterling is. And so people are willing to lock in their gains and get out pretty quick on some of these when the story is still looking very bullish. So keep an eye on these. If we get bigger pullback on this weakness, unclear because I am recording this before NVIDIA reports. Will the NVIDIA report be enough to quiet some of the fears that the AI revolution is slowing or that it's going to, implode on itself any day now? These companies that are involved in the infrastructure build out, this is real money. These are real contracts that are signed. Contracts can be broken, but for this year, heading into first 6 months of next year, all of this build out is actually happening. So I've always said eventually it will slow. Eventually we will have NVIDIA, Vertiv, and some of the others saying, it's slowing. We're not having as much of a backlog. Our margins are not still expanding. And then we'll have a different story to tell on some of these stocks. But for right now, in November 2025, that is not the case. And I still love all these stocks. They're reporting record quarters. They are expensive, but not overly expensive. They're not Palantir. They've got the goods on earnings and sales. and they're in an area where the money is still flowing. So let me recap the stock tickers again. We had Sterling, ticker STRL. We had Eaton. I chose that one for the cooling, but there's others. ETN is the ticker for that one. Then we talked about Vertiv, ticker VRT. I own Sterling and Vertiv. I do not own Eaton because I own some other cooling thermal management companies. I will do another podcast with a few more of these, especially if we get even a bigger pullback. I'm going to take a look at some of the other names that I've talked about as well. They're not as well known as these, and these aren't even as well known, but those could be some hidden gems out there as we move forward if this weakness continues. So don't be sad that you can get in a little bit cheaper on some of these names. Pullbacks are good and healthy, and especially in bull markets. And these stocks, AI infrastructure is and are in a bull. So keep that in mind, but be sure to subscribe so you can get my next video when I talk about some more of these AI stocks and other things that are going on, because yes, believe it or not, there is more to this market than just AI. But be sure to tune in. You can get all of our videos on YouTube. Go to Zacks.com/YouTube to find us, or just put in Zacks Investment Research, or even put my own name in there in the search bar. You'll find it. We also have the audio is on Apple, and you can always get us there. We are on Spotify, Amazon Music, SoundCloud, just about anywhere you can get podcasts, you can get us. But be sure to do so that you don't miss any of this great stock discussion. Also, I'll be having some guests on as we get closer to the end of the year here on the Market Edge. So subscribe, get all of our content, and I'll see you again next week with some more stocks.